Yeah, Lendlease reported very, very well. Their result was well above our expectations. We were expecting around 29 cents a share in terms of earnings, but it was actually around 40 cents a share. So the business reported very strongly and does have a very strong pipeline in terms of the project work that they're doing over the next couple of years. The other encouraging thing that Lendlease did was through a number of their asset sales that they've completed over the last couple of years, they've been able to pay down their debt. So their balance sheet is in a very, very strong position. They've got gearing of about 7.3%. So it gives them a lot of leverage for future project work, but then also potential acquisitions if they're looking at heading down that path. So yeah, Lendlease is one that we've not only upgraded our recommendation to a buy, but also upgraded our target price to $12.50 from $12.
Okay, and the next one that has also achieved a upgrade is Endeavour. What's the argument there?
Yeah, Endeavour, it was probably a little bit of a mixed result, but the gaming revenue was very, very strong, and margins on their gaming or their poker machine business a very strong margin. So that was a positive as part of their overall business. They're looking at about 40% EBIT growth for the year. So that was well ahead of our expectations, and we are finding that not only during lockdown were people going to the bottle shop and drinking at home, now they're actually moving out of home or not moving out of home, but moving out of their entertaining out of home, I suppose, and going back to the pubs and clubs. So it's a business that is there for all seasons, does well in good times and bad. So yeah, we've again upgraded Endeavour to a buy from Accumulate.
Okay, and then Viva Energy, another that's been given a little bit of a bump up, a higher price target as well. What did you like about the company's results?
Yeah, the result was in some respects similar to Ampol in that their refining margins were a lot better than expected. Their result, retail revenue was a little bit worse than expected, but management have actually come out with some fairly positive guidance and expect that their retail revenue will be better over the next 12 months. And with those increasing refining margins, it's a business that is still in a good position in the short to medium term. Obviously, it's an evolving industry, so as the world becomes more accustomed to EV, the likes of Viva Energy then have to look at how they adjust their business. But at the moment, it's a business in good shape and should have some reasonable growth over the coming 12 months.
So with those sorts of upgrades, I mean, maybe it's a little bit of a survivor bias or something like that. Is making me or bringing me to this question. But a lot of bearishness in the market going into the earnings period, a lot of downgrades coming through in advance of it. Do you think this is reflective of a market that was a little bit too bearish, and that we should start to expect sort of further upgrades from here, or are these more outliers than anything else?
Yeah, I think generally the reporting season has been a little bit better than expected. As you said, Kyle, that everyone was anticipating it would be a fairly dour reporting season. I think that what we saw is that financial year 22 for most industrial companies was actually fairly strong. We knew that it was going to be strong for the material stocks, but industrials probably surprised a little bit on the upside. On the retail stocks, consumer spending still seems to be fairly positive. What we have, though, seen is that many companies were reluctant to provide outlook, and if they did provide outlook, there are a lot of uncertainties in the future. So it's not necessarily a rosy future in terms of financial year 23 and beyond, but I think that the sell-off that we saw in April, May probably was a little bit too extreme, and what we're now seeing is value in a number of the stocks that are still generating reasonable revenue.